What's up, everybody? My name is Justin, and I just opened a brand new Roth IRA retirement account here in 2024. We're going to break down what it is and what I'm investing in this new series. We're going to follow along with the account, show you all the positions, any trades that I take, and what I'm thinking about long term in this new Roth IRA. Okay, so if you don't know, a Roth IRA is an individual retirement account that allows you to contribute after-tax dollars into the account. So there's no tax benefits up front, like if you're having your withdrawal done before taxes into maybe a 401k traditional or something like that. There's no tax benefits up front. You're putting in all of your money in after you've already paid taxes on them through whatever income you may be making. Now, you may be wondering why you do this. Well, that's because after the age of 59 and a half, and as long as the account has been open for 5 years already, then you can begin withdrawing that money plus any gains and anything that you make on it tax-free in the future. So a Roth IRA does have some limitations to it. You can only put in so much money after-tax dollars contributed to the account every year. For example, in 2024, that is $7,000 if you're under 50, and as long as you make less than $146,000 if you're single, or $230,000 if you are married as a couple. It's $7,000 as your contribution limit for the year. So I'm going to show you my Fidelity account. That is where I've opened this new Roth IRA. I'm going to show you the positions that I am currently in and the one trade that I've already executed and completed in that account, and talk about what I'm thinking about doing there for the future. Just keep in mind, nothing in this video is a suggestion or advice on what you should invest in yourself. This is just how I'm doing it, and it's going to be a little bit all over the place. My investment strategy is kind of pick companies that I like, pick companies that I think have long-term growth potential, and I'm going to be doing some more shorter-term swing trades in there as well if I see a good chart opportunity, and then if I get positions up into the hundreds of shares, maybe selling some covered calls against those positions as well, all just trying to earn some extra income in this Roth IRA as I go manage 100% on my own. Okay, so here you can see we are in my Fidelity account. I have contributed $700 into the account so far this year in 2024, and so you can see the balance is currently sitting at $760. So I am up on the account overall. I think the first thing I'm going to do before I show you my current positions is show you the one trade that I've already executed, entered, and exited so far this year. Okay, so the first and only trade that I've completed to its final destination, I guess you would say, was a ChargePoint swing trade. I saw ChargePoint was down huge. I used to love this company for long-term potential. Ever since Tesla made the big plans and charging station deals with Ford and a few other companies, ChargePoint has really taken a hit, and I don't like it as much long-term anymore. So I've pulled back kind of investing in that long-term, but I did see an opportunity here in ChargePoint for a little bit of a swing trade. So you can see here I put in $423 of positions into ChargePoint. I believe that was 4 or 5 different buys. And then on the day that AMC and GME and all those guys were doing the big pump, ChargePoint pumped up as well, and I ended up making about 18% here on this trade. So I made $77.39, which is not too bad on a $400 position, and that was the first trade I've completed here, which got me in the green in this new Fidelity Roth IRA. Okay, so let's break down my positions that I currently have here in my Roth IRA, and I'll tell you what I'm thinking about each one of them. So let's actually start at the bottom on this one, because these are going to be more of my long-term hold type plays. So Verizon VZ, I'm in this one. I only have one share so far with a cost basis of $39.52, but Verizon has one of the absolute highest dividend yields in the market. So this one I'm planning on accumulating a lot of this one actually over time. Planning on accumulating a lot of Verizon, cashing in on those dividends. I think it's one of those companies that's going to be around for a long, long time. They're one of the biggest players out there, obviously in the cell phone market and in the communications market. So I'm going to continue to acquire them, have the dividends pay out quarterly, and kind of just keep bringing down the cost basis over the years. I don't plan on selling Verizon for a long, long time. Okay, my second position here is Tesla. You can see that I'm actually currently red in my position on Tesla, but only about 5%. My cost basis there is 196.21 with my one share currently. I also plan on holding Tesla for a longer period of time, not so much dividend based because they don't really pay anything in dividends, but it's more so I love the company on its own. I think it's got potential to make another huge run in the future. I actually wish I would have bought some more when it dipped down recently into the 140s, maybe even 130s it got to. But I had all my money in that charge point trade at that point, so I wasn't able to buy in more. So currently sitting in one share here of Tesla with that cost basis of 196.21. All right, my third long-term position here is in MGM. Yes, it is that MGM, the casinos, all the resorts in Las Vegas, in Maryland, in Atlantic City, wherever else they may have them. I just really believe in that company. I mean, how can you lose money when you're making billions and billions and billions of dollars taking people's money from the casino, including some of mine? They're also partnership up in the credit game. They are out there with credit cards and everything. So I really believe in MGM long term. I will try and accumulate some more of this one. However, out of the 3 longer term investments that I have so far, this one will probably be the one that I add to slowest. Okay, the next investment I have here is FLUX, and that is Flux Power Holdings. This is actually, I think, my most recent acquisition. I've bought it twice in 250 share lots, currently in with 100 shares at an average cost basis of $3.19. And this is more of a swing type play. It's down about 50% off of the 52-week high. They actually do lithium ion batteries and charging solutions, which I'm a pretty big believer in that sector overall. I think there's going to be a lot of need and use and value in if you can make a more efficient battery for companies. All the companies are going to want that. If you can make a top-of-the-line, more efficient battery that costs less, that uses less electricity to charge or has more charge, holds it longer, that stuff is going to be in high demand. So I've bought 100 shares here in Flux, and I'm expecting it to either do a pretty nice bounce, or if we get some kind of, news that comes out good. They kind of missed on their earnings recently, but I do have 100 shares of them now, so if I'm able to, I may look into selling some covered calls against them. The options aren't overly active on this one, but we'll see what it does. So if we look at the stock chart on Flux here, I also like it just because it has come down pretty big recently, so I'm buying low. If we look at the all-time chart here, it has made some runs in the past, and it's come down to pretty much where it's always bottomed out and started to curl from there. So this is one of the reasons that I liked this Flux play. It was cheap. I could get in, decent share size. It's got potential for a nice move upwards for a percentage gain, and it's down into an area of some long-term support going back, several years to 2022, 2020, things like that. So that's kind of the idea here on the Flux play. Okay, and the final investment that I'm currently in, this one's also more of a swing type play, is here in ATLC. That's Atlanticus Holdings Corp. I currently have 2 shares of that at an average cost basis of $25.62. And if we go look at the chart for this one, you can see why I like this one. The chart is actually pretty similar to what I just showed you in Flux. It did make a pretty good down move recently, but it's into some area of support here on the chart, and if it does get a bounce, anything like it has recently in recent chart history, it's got potential for 50 to 100% gains pretty easily here in ATLC. So I'm in 2 shares at an average of 25, whatever it was, and I could potentially add some more if it dips further, but this ATLC play is definitely more of a swing trade for me. Okay, so that's all of the current positions. If you look in the cash available, I still have $131 currently uninvested. I'm waiting to see kind of this week what I want to do with that. If Verizon comes down a little bit more, it's been moving down, I may start adding the bigger positions into that. Or, if Tesla really put in some kind of big drop, but obviously there's not even enough money in there. But I do plan to keep adding money. I'm obviously nowhere near the $7,000 contribution limit for 2024, only 10% of the way there. I doubt I will get all the way to that mark in 2024, but I do plan to keep actively monitoring, trading, and investing in this account. Okay, guys, so that is the new Roth IRA that I've opened up and will begin investing and trading in. This is going to be kind of a sporadic new series that comes out here on the channel. Maybe when I'm not able to do my day trading, which is why this video is coming out today. And, it'll just be something that you guys can follow along with if you'd like. Maybe give me some suggestions on what you think that I should invest in longer term or swing trading potential. And we'll see how the account goes and hopefully grows over the next several years. So hopefully you enjoyed this video. If you did, do me one big favor. Hit like, hit subscribe on the channel. It's absolutely free for you. It means a lot for me. And I'll see you for the next update.